So the volatility in the market yesterday was very well expected, given that we were expecting a very, we're anticipating a very important news that would have a very huge impact on the markets, financial markets in general. In the FOMC news, the Fed, and as expected, very well expected, we saw massive volatility at exactly 2 p.m. Eastern, and I'll be showing you briefly how the market reacted accordingly. This is Pedro again. Welcome to Crypto Reality channel, and just like I said earlier, yesterday at exactly 2 p.m. Eastern, here it is, the market reacted on exactly getting to that 2 p.m. Eastern. That's a massive reaction from the DXY, and a massive follow-up in the next hour. And here's how cryptos reacted as well. We had the massive reaction from cryptos. This was the exact hour of that FOMC. There's a massive candle. You can see the length of this week, and you can see what followed. Accompanied the following hour. Market reacted massively to the news from yesterday. The increased inflation rate from the markets was what triggered this volatility during that period. So no doubt about it, the markets are the current fundamentals are massively in favor of the DXY, the US dollar, and very well against other financial markets. Here's how the stocks reacted as well. The stocks reacted very well in like manner. Here's the SAP, here's the hour, here's the following hour. Massive volatility from the stocks as well. And switching over to the Euro USD as well, something very similar to. Here's the hour, here's the following hour, and you can see that the markets reacted massively to that news from the Fed. So yes, the market has reacted to that news, and what's next for the markets? The markets normally, the fundamentals are only there to validate whatever it is happening on the technical side, and so far so good. We've had from my last broadcast, I talked about the fact that the market reacted to this trend line, this mini downtrend line from 15th August. The market reacted massively from that massively bullish from that trend line to the upside. And given the fact that we're still in a range, you can see that the market has once again reacted massively bearish on getting to the top of this range. You can see that this is our safe box, and the market respected it perfectly. The safe box that we've been trading in for the past 3 months, which has been our consolidation for the past 3 months since June 18th, and you can see that the market reacted massively, massive bearish engulfing on getting to the top of this range, which is exactly the same as our the top of our safe box. The market is reacting massively from that point, and then everyone is back again bearish, calling for 10,000 and all that. But it is very important to note that we're still very much in this box, and in as much as 10,000 could still come, no one knows, but we need to respect the fact that this range is still very much intact. This is over 3 months now we're stuck in this range, and you can see that the market is reacting. There's a massive bullish reaction on getting to this point. Again, we're back to this point, and the market is beginning to experience some massive bullish reaction again. And if you take off this so we can see what the market is currently doing on a bigger broader perspective, we're stuck in a 3 months range. From this box we're stuck in a 3 months range, and taking it from mid-August, which signifies the start of this downtrend line, you can as well see that the market is also forming what seems to be like a double bottom rather, as it stands now. But whatever the case, you should note that we're still very much within this 17.622k bottom. So this is still very much within this territory, and nothing serious happens until we break out of this box. And so far so good, we're still very much in this box. We are currently seeing massive bullish reaction of this point, which seems to be like a bottom of this box, close to the bottom of the box, which seemed to be the case last 2 weeks, and we're experiencing that again as things stand. You can see that there's been massive volume. From the market. We've had the highest traded volume on Bitcoin ever since the history of Bitcoin and cryptocurrency. Today is just 22nd. We still have over a week to the close of the month. We're already having volume far more than what we've experienced the entirety of last month. You can see there's a steady increase in volume ever since we entered this consolidation back in June. There's been a steady increase in volume, but the market has been stuck in this consolidation. That is significant. That is that is evident to show that the market is in a huge indecisive state. We're in consolidation. Both bears and bulls have lost their momentum as things stand. There is no doubt about that. So you'd expect that with this massive volume, the highest traded volume ever since the history of Bitcoin and cryptocurrency, you'd expect that, given that we are in a downtrend, which is the underlying trend at the moment, you'd expect that Bitcoin should be down to zero, maybe negative, as virtually everyone is calling it. And you can see that Bitcoin, as far as I'm concerned, Bitcoin is doing very well. It has held its own, has held on very fine. As far as I'm concerned, it doesn't matter if we end up breaking below this consolidation, but you can see that we'll be stuck in a very long period of consolidation, far longer than the ones we've ever experienced this year, and even the one we experienced last year. Over 3 months into this consolidation, and Bitcoin is still holding on very fine in this box. The same, very similar price action it's occurring on the stocks, with the stocks as well. We have very similar price action to what is obtainable in the Bitcoin market, and you would agree with me that with this price action, on the daily time frame, we're currently seeing what seems to be like a potential inverse head and shoulders. So in as much as the price action here looks very much like that of the cryptos, because this is also a risk asset, the volume seems to be the reverse, seems to be the case for volume. Ever since we entered this consolidation, same time as Bitcoin, mid-June, 17th of June, which is exactly the same time as Bitcoin, because 18th was on a Saturday and stocks do not trade on Saturdays. You can see that this is 17th, the following day was on the 20th, it was on a Monday, 17th was on a Friday. So it's exactly the same time that the stocks entered into this period of consolidation, and you can see that the volume has practically dried up. There's been massive reduction in volume. We've had like a massive drop in volume. Volume has practically been dead on the stocks charts, as opposed to how the Bitcoin market has been behaving. Bitcoin has experienced the most volume ever traded in the history of Bitcoin and cryptocurrency within this past 3 months of 3 months plus of consolidation that we've experienced in the cryptocurrency market. And you would expect that the market should be with this massive volume, and given the underlying trend, which is a downtrend, you would expect that the market should be down to zero or negative. But Bitcoin has held so well, in my opinion. I don't care what any other person thinks about that. I know that's a bit harsh, but I'm just stating the obvious, the fact as it is. So the stocks have a low to beat to invalidate this inverse head and shoulders pattern, or a possible double bottom pattern at 3636. Low to beat is 3636 for stocks, and so long as this so long as this keeps on being the case, so long as this keeps holding on at least daily time frame basis, we should respect that. We should respect the fact that the market is basically in a consolidatory mode, and tendency for it to stay that way until we see a breakout of this consolidation. The breakout for stocks, the high to beat, on the other hand, comes at around 4325, which is exactly August 15, which coincides very well with that of Bitcoin as well. Bitcoin is as well August 15th, the high to beat coming at around 25.2k. So the tendency for Bitcoin to hit 17k again, which still till date is still a low potential low as things stand, is if DXY continues to strengthen. And you can see that as things stand, DXY is already struggling on getting to this point. It's already struggling, but the day is still very young. And but if the tendency for DXY to continue to strengthen or weaken, if Bitcoin, if DXY strengthens more from this point onward, then the tendency for Bitcoin to get to 17k is still there. But so long as this keeps on being the case, so long as DXY continues to lose strength as things stand now, I expect some sort of choppiness or consolidation from DXY, and that should keep Bitcoin in its should still keep Bitcoin at least within this safe consolidatory range for now. So that is it from me. I do not intend to take more of your time. This is a very straightforward analysis and scenario. So the recap of all what I've said is due to the fact that yes, we experience massive volatility from the market yesterday. I intended to put up that post, but I was not disposed at that yesterday prior to the Fed announcement. And in as much as there's a lot of panic, I'm just here to tell you why that happened. There was even that of last week was due to due to the CPI and the PPI news that of last week, which happened on the 13th. The CPI and the PPI news as well was what caused the massive sell-off and the reaction from the market last week, which coincided with the top of our consolidation. So yesterday as well was expected due to the massive news, the massive effect that the PPI has on the market. And so long as, even at with all the volatility and the massive bearish reaction from the market, we still very much, our consolidation is still very much intact. And so long as this continues to be the case, we should respect that. There's been the highest traded, we've experienced the highest traded volume ever in the history of Bitcoin and cryptocurrency, and we are still very much in this range. So that should be well respected. It is a clear indication that both the bulls, even the bears, are still very much exhausted in this. And so long as this is the case, we should respect that until we compromise this range on at least daily and weekly time frames before we can have a conversation as to where the market may be headed. But we should also be aware of false break. So thank you very much. I hope you had you got value from this. If you did, please let me know in the comment section, and always feel free to like, share and subscribe. And always remember that this is for educational purpose and not to be treated as financial advice. Financial asset trading is a risky affair, so always endeavor to carry out your research before entering trade. Do have a lovely day ahead. Bye bye.